Hello, this is Howie, and I'm here to help you win with money. This one's going to be a short one because we're talking about DocuSign only. As you can see, DocuSign was up $13 today, 6%. After hours is up another $11. So that's a good thing. It is down from the all-time high of 290. That was at last earnings, about a day or two before last earnings. It went up to 290. And you can see what happened. It jumped after hours because it beat. So that's a good thing. Whenever something beats, it's really good. Now, the other thing that I like about DocuSign, it's not an S&P 500 yet. It's not in the S&P 500. It's a $42 billion business. Will it become one day? It could be. We'll see. You got to be profitable. And you can see they're not profitable yet. They're still in a hyper growth mode. So we'll see. It may take 2 years to get there. So we'll be patient, but we're making money along the way. But we're not done yet. We always know ARK Invest is very popular now. Let's see what they're doing. I already pulled it up. I went to the website, punched up DocuSign, and I want to show you something with the buying pattern of this particular thing. So here is a chart for the last week. We probably want to expand that a little bit, and you can see the pattern of the size of the ownership. You see that? It was really small percentage, and it's over here, the shares, and then it becomes 1% of the fund, and then look at the share count. The share count is still rising, still rising. They're doing a lot of purchases every week, and look at that now. So as of last week, look at this, almost 1 million shares, and not too long ago, less than 4 months ago, you're talking about 7-fold the share count, or 6-fold. But it's growing fast, and look, they're accumulating at over $200 a share. Now, why does that matter? That means it's still close to fair value. Maybe there's a lot more growth. I like it because it's showing you that they're loading up in not just one fund, but in a lot of other funds. So here's another one. Let's just scroll back and you see it. It was 100,000 shares down here. You know, they're selling a little bit, but they look, they've been buying. So this is also 1% of the fund. And then here's another fund, here, the F, and you see the same pattern. They've been buying. Look how many shares, 124,000, 2% weighting in this fund, and it was starting down here. So there's a lot of good signs based on this particular mutual fund. Now, do you base your life on one company's mutual fund? No. So I don't want you to get the impression that if only one person buying it or one fund family is buying it, you should buy it also. I think you need to do your own due diligence, but I do think this type of business will continue to grow. This is not a COVID play. This is a COVID accelerated their business model so everybody understood it quicker. So think of a Uber that no one understood. In the beginning, people were like, well, why would I need an Uber? Only people in New York City and San Francisco may need an Uber. And so one day, as Uber becomes more popular, you're starting to do it in different cities. Maybe in Atlanta, maybe in these second tier cities. And eventually, if you can do it at any city with an airport, then people are starting to see the value in it. And that's sort of the network effect. As more people use it, they see value. And DocuSign is the same concept. Their business, sometimes you don't see the need for it until you start using their products. And once you start using their products, you realize how valuable it is. Again, I mentioned it in a previous video. Real estate agents love DocuSign. You can sign your contracts. Mortgage people love it. Today, I signed something via an email, some legal binding stuff with my employer. So if every company starts moving into this space, there's a lot more room for growth. So that's why I like it. I personally own it. I didn't buy it in the 200s. I got in down here. So I'm quite happy with my investment. I'm not done with it yet. I'm gonna, like I said, I'm always looking for new companies to add. I added Fastly the other day. Today I'm playing a short-term play on Lemonade. So I like to follow different companies and see what's good and what's not. So hopefully you like this update. And if you haven't, please like, subscribe to my channel. Look at the way I do options trading. If you don't follow my channel, look at some of my videos. I'm one of the few traders who will actually post my option trade. I actually do spend time talking it out. So some of the videos are a little bit longer. They're 20 minutes in length, but I explain the trade, why I'm doing it, and at the very end, generally I'll do the trade, and then I'll in a lot of my videos, I copy my transaction log or my trading log into a spreadsheet. I pivot it, and you see all my P&L. You see my trades, you see my losses. I don't hide anything. I have multiple pivot tables. You can see what I did, my pattern for the month, for the quarter, what tickers I've been playing, which one did well for me, which one didn't. So if you haven't seen those videos, take a look at them. Like I said, not a lot of traders like to do that. They only talk about their winners. They only like showing the video after the fact, after they won, and they'll show you the 100% move. I track my trades. I show my transaction log. There's nothing there to hide. It's all visible. It's transparent. I don't always make money. Obviously, I lose money. My goal is to show you guys with good trading habits, you can consistently be profitable at least every month. I can't guarantee you'll be profitable every week. If you have bad trades, it can be a bad week. If the market dips or moves against you based on your direction, hard to do that. But I try to make a profit at least every month. And then my rule is generally at least a quarter needs to be profitable. Because if you do that, then generally speaking, you will make money at the end of the year. So thank you so much. Let's do this together. Let's do this $1 at a time and have a profitable day.